6 investment strategy for real estate investor. This is one that you need to know. I'm joking. There are many different ways to invest in real estate, and as any investment, the opportunity range in complexity, risk level, and ease of entry. This approach will give you for sure a good base to start, and some of the more common approaches to real estate investment require for sure a good due diligence action. So which one you should choose? Hi, I'm Daniele, Sica, real estate agent and investor, and today video it's about the tips to start investing. So let's find out. What are the top strategies to invest in real estate nowadays? So lots of people always ask me, well, it depends on your personal financial situation, the access that you have to financing, or your risk tolerance. Yes and no. And you will be able to understand what I'm going to talk about now much more, because as soon as you start on the first deal, trust me, you will go easy. So I would say we have the buy and hold strategy, the flip, the BRRRR technique, the joint venture for sure, the multifamily property, and the rent to own. So let's go a little bit in detail, so one by one. First, the buy and hold. The strategy to buy and hold is a simple buy a rental property that is slightly under market value and hold it for a long term. The goal is to have tenants gradually pay off the mortgage so that in the end you have a property that is mortgage free and on which rental income is being paid to you indefinitely. Sounds good? Buy and hold is popular option for many investors around the globe because it's one of the most straightforward real estate investment strategy. As long as the property income covers the expense, and now every lender has a slightly different way to calculate this, and as long you have a minimum 20% down payment. It's also the easy way in real estate investment to finance. That's the other aspect you have to consider. Number 2, the flip. The flip is a popular strategy that has been the subject of many television shows in the state in Canada. Most of the things that you saw, unfortunately, is not true. The concept is to flip simple. Buy a home significantly under market value, renovate, stage, and then sell for a profit. In reality, it can take quite a while to find a great property to buy and flip, as well as it's typically easier to live to a flip if you or someone you trust has some home renovation skills. Will be much easier. In any event, if done correctly, the rewards can be really significant. On the financial side, it's a little tricky because you obtain a mortgage for a flip property, since you don't want to be able to show an income from it until it's sold. It's a little bit hard. So keep in mind that you may have to work with specialized lenders to obtain the necessary financing. So the key to success is to ensure that the factor in all your financial costs when you calculate the expected profit on your flip. Number 3, the BRRRR, which means buy, rehab, rent, refinance, repeat. This method is really very profitable for real estate agent and for flipper. They're looking for distressed property. They have to rent and then they refinance in order to further rental property investment. One of the main difference between the BRRRR method and the conventional investment property strategy is that you focus on investing in distressed properties and on refinances the purchased property in order to buy another one. Rinse and repeat. And if you are a real estate investor, consider this type of strategy. Read to learn about how to do the BRRRR method works, right? The pro and the cons, and if it's the right method for you financially or real estate investor goal. If it's done correctly, again, the BRRRR method can provide passive income and the revolving methods for purchasing and owning rental property, and keep going with that. Then we move forward. We have number 4, the joint venture. Joint venture, I would say, with pre-construction as well, VIP sale. Many investors who don't have or don't want to be tied up to funds in purchasing and investing property on their own will team up with a partnership with someone with the same investment goals. In a joint venture, it is vital that to have absolutely everything in writing before any money change hands. Make sure that you should outline not only the initial financial expectation of each party, but also things like who's going to do this, who's going to do that, how you will decide when and how to do some repairs, some renovation, right? Who pay for that? Who you will select the tenants, who will deal with them, when you intend to sell the property, based on which factor, which criteria, right? So to obtain also the financing, make sure that your investment partner has a good credit score or credit score in general, has not overextended before sitting down with your mortgage professional to talk about your financing option. Number 5, investing in multifamily properties. Investing in a multifamily property is a great way to get the most bang for your buck. Multifamily housing is any dwelling that houses more than one residence, where more than one family can reside. This list includes duplex, small apartment buildings, and condo complexes. Though they are more expensive and cost more money up front, for sure, you have more tenants under one roof, each paying rent monthly, right? Pretty simple. With the multifamily also, you are responsible for only one yard, one roof, and each building you own. One property you take care of instead of several single family home in multiple locations. That sometimes can be driving force to opt to multifamily investing, right? This type of real estate investing is also one of the carry low risk, with the cap rate ranging from 4 to 10%, and depending on course of the property value, operating expense, and asset class. Multifamily also is the bigger metropolitan areas with the low vacancy rate, and are of course ideal as are never an updated building, preferably in a high clusters. Number 6, the rent to own. The rent to own is a strategy that once again has been gaining popularity in Ontario for the last 5-6 years. The way it works, investors purchase a property, but rather than advertising it at a traditional rental, they look for future owners. They are typically people who want to own their own home, but they cannot because they either don't have good credit or they have some insufficient down payment. And from an investor perspective, you will negotiate an agreement to have them purchase the property for you at predetermined price by a predetermined date. And in addition, an option fee for a few $1,000s is typical charge to secure the property, and for predetermined length of time, that usually it's between 2 and 4 years, market rent is a charge plus a determined amount on top of that, which will go towards the tenant's future down payment. On the financial side also, the investor needs to ensure that the property cash flow and the market rent. And just as important, the tenants on future own should work with the qualified mortgage professional, obviously, to develop and stick to a plan that will enable them to end up in a satisfactory financial position with good credit in order to be qualified for a mortgage when time comes for the purchase of property. So between 2 and 4 years, right? So now you're armed with some basic information on the most popular way to invest in Ontario and everywhere, and as any investment financially will be with the greatest concern, you can speak for sure with me, with another realtor, a good mortgage professional that can help you decide which approach is best for you and your family. So happy investing! And if you like this video, please subscribe, send me an email, any concern. We are here to help. We have a great team to figure out and allocate your problem first, understanding your option, and then we can optimize. There's always interesting approach and so many different methods. I just explained only 6, and I will go each by one and we'll expand a little bit more so you can understand. There's a lot to learn, but at least this is the base that you can even Google and try to find out a little bit more. But I'm here to help anytime. Send me your thumbs up and looking forward to talk to you soon. Happy investing!